Hi everyone. Today let's look at the um, cash budget question 3. Right, question 3 is for 35 40 marks and it's supposed to finish again in 35 minutes. Right, looking at the question, it says indicate, because I've said it's cash budget. Right, concept first one, indicate whether the following statements are true or false in the answer book. Right, a cash budget is prepared to predict expected future receipts and expenses. Right, the keyword is future. Right, a cash budget is prepared to show not only the future but the actual expenditure and future expenditure and actual cash and future cash. So that will be false. Then a zero-based budget is started from scratch each year. So if you are operating a zero-based budget, basically each year you start your budget from nothing. You don't have any idea what the budget will be like. So basically you come up with your own methods of predicting how much you spend, right, compared to other forms of budget. So on zero-based budget, basically what you're doing is you don't consider your last previous year expenditure or you just past your current expenditure. You don't consider your uh, current revenue. You just do your budget from nothing, like no information. You don't use anything other than basically your own prediction and your own basically estimates. You're not estimating based on a figure that right? So that would be true. The capital expenditure budget is a budget for how the owner's capital is spent, right? I know it becomes a little bit confusing because when in grade 10, I will say the money that the owner puts into the company is called capital, right? That's capital investment, right? But as you go, now when you talk about capital expenditure, you're not talking about how someone spends that capital, because you don't spend capital. Capital is basically a ledger, right? What the person's interest in the company is. That's capital, right? As a sole trader, so the interest of the person in the business or what the business or the person invested, that's why you've showed us capital, right? It's what the investors have invested and put into the company. So when we talk about capital expenditure, we're not looking at how the owner's capital is going to be spent, but basically we're talking about uh, spending on capital assets, the money that is spent on capital, that's capital expenditure. So basically we're looking at what is it that you're going to buy. Mostly we're looking at fixed assets, right? Capital expenditure. Mostly find that as you go, it will be referred to as capex, right? As you go with your accounting, as you progress to accounting, find that they're talking about capex, right? If they refer to something as capex, basically means capital expenditure. You get to hear this term, a lot as you progress with your accounting career. So this will be false. So here I said it's false. Here this is true, and here it's false. Because capital expenditure is basically expenditure spent on assets. Right, then question 2. Right, I'll complete those. We have false, then true, then false. Right, then you move on. Then you're provided with information relating to Osborne Industries, a business that sells detergents and cleaning products to the public. The business is owned by Donny Osborne and his sister Mary. Required, complete the data collection schedule for the period 1 May to 30 June. I calculate the missing amounts. indicated by 1 to 5 in the cash budget for May 2023 and June 2023. So remember the cash budgets for your only permitted to calculate May to June. I do see. At I refer to information team. Mary is convinced Donny to buy a delivery vehicle on 1 May. I remember Mary is Donny's sister. Donny agreed, but he prefers to use the service of Mangre Couriers since they offer unlimited kilometers on a fixed term contract. Right? So state 2 points in favor of using Mangre Couriers. Right? We'll get the information there. Then refer to information C and G. Two of the sales assistants are close relatives of Donny and Mary. The sales manager is concerned that they are always absent from work and the other assistants are complaining. Provide a calculation to justify. Right, so you need to provide a calculation to justify his concern. Right, that's other assistants. Provide 1 point. Then refer to information G. The sales assistants were dissatisfied with their increase in June, so they were not happy with the increase in June. Provide 1 reason for their dissatisfaction. Quote figures. So you need to provide 1 reason and quote figures. Then a bid committee, that's 3.2.6. A bid committee member from the local public hospital has offered to recommend Osborne Industries to supply detergents, right, and cleaning material. So this person has offered to recommend Osborne Industries to supply detergents and cleaning material to the value of 1.2 million during the tender process. However, he will only do this if Danny pays him 35,000 rands to convince the other committee members. Right, so he wants a bribe in other facts, right, to convince the other committee members. Give Donny and Mary advice in this regard. State 2 points. Right, then information A, sales and data. The total sales for the period 1 March to 30 June. Right, so 1 March to 30 June. Right, actual in March 6,900,000. April actual 7,500,000. Then budgeted May 7,850,000. Budgeted June 8 million. 75% of all sales are on credit. Right, that's very important. Based on experience, debtors pay as follows. So that's the data payment structure. 60% they pay in the month of the sale. You gotta be careful with terminology. Right, when they say 60% pay in the month of the sale, that means 100% of the sales are split this way. 25% is cash. Then 75 on the 75%, 60% pay in the same month. Let's say maybe you're looking at March. So if March we remove the 25%, which is cash sale, then on the remaining 60% they will still pay in March, because they say in the month of sale. Alright, you gotta be careful with the terminology. Then less 4% discount. So if they pay in the month of sale, you deduct 4% discount. And then pay 30% in the month following the month of sale. That means they pay, if the purchase was made in March, 30% will be paid in April, right? Then 8% 2 months after, right? So if it's March again, so 8% will pay in May, 2 months after. That's March and April. At April and May, so they'll pay 2 months after the month of sale. So they'll be paying in May. Then the rest must be written off as irrecoverable, right? So you calculate the percentage. That's 68 plus 8, that's 90. Then 2% is what? Bad debts. right? So 2% here. Will be bad debts. That should be easy, straightforward to calculate. Purchase and creditors. Right, the business uses a fixed stock base, that is, stock sold in the month is replaced at the end of the month. Right. So if you sell stock in March, every stock that you sell, you replace it at the end of that month. Right. So they're not worried about the actual dates here, whichever month you sell. Remember, it's a budget. It doesn't basically say on the 15th of March or on the 29th of March. Right? It says whatever stock is sold in March, right, will be replaced at the end of that same month. It will be replaced at the end of March. Right. Markup on cost is 25%. This is very important to calculate the purchases, right, of stock. 80% of all merchandise is purchased on credit. That means if you're going to replace the stock that you sold, 80% of whatever you buy, right, is going to be on credit. Then 20% it's cash. This becomes very important when calculating other places. Then creditors are paid in the month after purchases are made. Right, that means creditors, right, talking about 80%. Right, so creditors are paid in the month after the month of, that means you purchased goods in March, right? You pay creditors in April, right? So creditors are paid in the month after the month after purchases are made, in order to qualify for 2% discount. So that will be payment minus 2%. Then salaries and wages. The business employs one sales manager. Right, I don't know why we're going to use that, but it's very important since it's here. The business also employs 5 sales assistants who earn the same basic salary. In addition to earning a basic salary, the sales assistants earn also commission of 1% each for all sales above budgeted sales, right, a month. For that month, the commission is paid in the same month, right? So the commission should be paid in the same month. Then motor vehicle and delivery expenses. The business plans to buy a delivery vehicle on 1 May 2023. The business had previously outsourced all its delivery to Mangre Couriers, right? So they'd outsourced, right, to Mangre Couriers. A 20% deposit will be paid on 1 May, and the balance will be paid in equal installments, monthly installments for 4,500 over 4 years from June 2023. So 20% deposit and 4,500 for 4 years from June 2023. Osborne Industry will take an additional loan of 15% per annum. Extra from the cash budget for the 2 months ending 30 June. So you're given the cash budget, right? With the question mark, that means those figures mostly you have to calculate. Cash sales in May, you need to calculate that. It's easy to calculate. Then receipts from debtors, right? That comes from the data sheet that we're going to complete here. Now is the first question. Right, that comes from this debtors collection schedule, right? The receipts from debtors, right? It comes from the debtors schedule, right? Then loan, right? There's 20,000 of loan that will be in June. Then total payments, right? The question of payments to creditors, right? We need to calculate this. Then we have cash purchases, right? We need to calculate this as well. Right, then salary to salary manager, right? 10,000. Salary sales assistants, right? Commission sales assistants were given, Then wages cleaner, right, we given. Then deposit for delivery vehicle, right, we given. Then vehicle installments, right, we given. Then delivery expense, monthly couriers, that's given. So you need to calculate this deposit here, right? Then interest on loan, right? Then we need to calculate interest on loan for the second for June. Then sundry expenses, we're not going to be calculating anything there. Then Don and Mary compare the budget and actual figures for June 2023. Sales, right, budgeted actual, right? Then payment to creditors, right? Then delivery expenses, right? Then salaries, sales and assistants, right, budgeted and actual. Then commission, then sales, right? You've got 8,500 in question mark. Then salaries, managers 10,000, 10,800. Then driver and assistant driver, right, with nothing. Then the actual becomes what? 29,800. So let's now look at how to answer the first part, right? This part. Let's now look at how to answer that part. I'd complete the data collection for the period 1 May 2023. When we come to our data collection schedule, right, we need to complete for April, right? Because basically credit sales in March, right? They all of them are received in May, but then credit sales in April. Remember, what you need to focus on here is you're given credit sales. At least you don't have to calculate. Some questions you need to calculate credit sales on your own, right? Then from there deduce the different amount that are going to be received in different months. This is according to this that we have here on information B, I think information A. So we have credit sales for April, right? That's what we're looking at. If you look at here, credit sales for April, that's what we need to fill in, because how much is going to be received in May and how much is going to be received in June, right? So credit sales in April, remember the question asked you to do for credit sales that are going to be received from went up in 1 May to 30 June. So whatever we're going to receive in May and in June, right? Then if you come to our question down here, right, so credit sales 60% is received in the month of sale, right? So the April credit sales, right, 60% is going to be received in April. So 60 is in April. Then for April, right, if I can write this down here. So April credit sales, right, 60% is received in April, right? Then they have 30% in the month following the month of sale, so 30% in May, then 8% in June, right? So let's calculate this one. It's simple. Once you understand what you need to do, it becomes very simple, right? So we need 5,600,000 625,000 times 30%. That's 1,687,500. And then in April, what's going to be credit sales that are going to be received in June? That's 5,625,000 times 8%. That's 450,000. Right, that's done. Then May. Right, the May changes a little bit because what we have in May is the May credit sales. You just have to be careful. May credit sales. Right, 60% are received in May. Then 30% received in June. 8% in July. Right, so for this one, we are only concerned about these two, the 60% and the 30%, our budget period. For this one, we're concerned about the 30% and the 8% our budget period, because we're calculating for only the ones that are going to be received in June, in May, and in June. Right, so the 60% for April was outside our budget period, right? For April credit sales, and same applies. The 8% in July is outside our budget period, so we stick to what? To the May, to the 60% and the 30%. Right, so calculating 587,000. Now 5,887,500 times 60%. That's 3,000,000. $532,500. Then 5,887,500 times 30%. That's 1,766,250. Right, then we get our totals. Right, because for June they calculated for us already, so you don't need to put anything. Right, because if you want to check if there is an option to check, you see this amount here. See this. If you say 5 million, because you know it's the last, right? The last one is 8%, so the last is always 8%. Right, so if you say 5 million, hope it to come right. 5,175,000 times 8%. See, it gives you this amount here, you know. So that's how you need to work these things out. We can prove some of them, they might not be correct, right, because of typo errors. Right, so the total here, you will get 414,000 plus 1,687,500 plus 3,532,500. So you get 5,634,000. Then for June, receipts from debtors for June, that's 450,000 plus 1,766,250 plus 3,456,000. That's 5,672,250. and that's your total. That's your 8 marks, right? It's simple and straightforward, right? So for these values, let me just write the calculations so that you know where they came from. We said 5 million. No, so that's the wrong side. And this one, so we used the 30%, so that is 5,625,000 times 30%. Then the other one, we said 5,625,000 times 8%. Then for this one, here, we said 5,887,500 times 60%. Then for this one here, we said 5,887,500 times 30%. And just make sure that this looks clear. Let me rewrite it where it's clear. So this is where should I write it? $5,887,500 times 60%. This gives you this. Okay, right, just for the purpose of workings, if you wonder where I got what. And then the next question asks you to calculate the missing amounts indicated by 1 to 5. Right, if you come to our question, right, our question looks at the budget. Right, cash sales in May. The cash sales in May. Right, because in May, right, the budgeted sales is 7,850,000, and they say 75% of all sales are on credit. That means 25% are on cash. So 7,850,000. That's 7,850,000 times 25%. Because if you look at the question, it tells you that 75% on credit. That means 25% is cash, and that's cash sales. That is in May, because we're looking at May here, because they said calculate the missing figures. And when we come to our question, right, 1 is cash sales, and in what? In May, right? So that will be given by 7,850,000 times 25%. That's 1,962,500. right? Those are the cash sales in May. Right, then the next one, right, 2 says cash purchases, right, in June, right? Cash purchases in June, right? That will be a little bit of working, right? So cash purchases in June, right? If you look at our information in terms of purchases, it says the business uses a fixed stock base, that is, stock sold in the month is replaced at the end of the month, right? And markup on cost is 25%, right? Then 80% of all merchandise is purchased on credit, so that means we need the 20%. That's the cash sales in June that we need here. So what we need to do is, how much was sold in May, is it? Let's see the question. Right, cash purchases, right, in June. How much was sold in June? Right, because you replace the stock in the month of sale, right? So in June, you're looking to sell 8 million, right? And your question says all merchandise purchased on credit, right? The business used fixed and stock sold, right? Stock sold, right, in the month is replaced at the end of the month. So how much was replaced in June, right? So how much do we sell in June? That's the first thing that we need to calculate. And how much we're supposed to replace, right? So how much do we sell? The value of stock that we sold in June that we need to replace, right? How do you find the value of stock that we sold in June, right? You need to remove the markup, calculate the 100% of what was sold to get the cost price. So it comes back here, right? So basically you're going to say 100 over what? 125. That's how to calculate cost price from a selling price, right? Times 8 million, right? So you calculate cost price, because remember, you are replacing the stock that you sold. What was the cost price of the stock that you sold? That's what we are calculating here. So 100 divided by 125 times 8 million. That's 6,400,000. Right. Of the 6,400,000, right? Well, we need to replace at the end of June, because everything was sold in June. At the end of the June, you need to replace stock worth 6,500,000. So you're going to purchase stock worth 6,500,000. Right. In that 6,400,000, right? 80% is on credit. That means 20% is on what? Cash, right? And we need to calculate the cash sales. We need to calculate the cash sales here, right? Cash purchases, sorry, right? So cash purchases should be 20% of the 80%, right? So we need to calculate 20% of the 6,400,000. So that will be 6,400,000 times 20%. Times 20%, that's 1,218,000. 1,218,000. Right, then the next is 3. Payments to creditors, right? Payments to creditors, May, right? How much are you going to pay in May to creditors, right? If you look at the question again, same information on purchases, right? And creditors. Creditors are paid in the month after purchases are made in order to qualify for a 25% discount, right? We use exactly the same thing, right? You're not given your purchases. You need to calculate how much was purchased in the month before that, because we're looking at say creditors are paid in the month after right? So the question is asking us to calculate purchases, right? A payment to creditors in what? In May. So we're looking at how much we purchased on credit in April, right? How much was purchased on credit in April in terms of the total value of what? Of the good that we purchased, right? That are supposed to be paid in May. So in this particular instance, whatever you purchase from creditors this month, or you purchase from creditors on credit this month, you pay next month. So let's calculate first how much was purchased in April on credit, right? And if you come again, it's the same concept, right? We're using exactly the same thing, right? We have April purchases 7,500,000, right? And we need to calculate the cost, right? That needs to be replaced. So you come back here again, it's going to be 100 over 125 times 7,500,000, right? That's 100 divided by 125 times 7,500,000. That will give you 6 million. Right, then of that 6 million, right, that's what need to be replaced, right? But we need 80%, right, of the 6 million, right? Because the question says 80% merchandise are purchased on credit. So whatever is going to be paid in May should have been bought on credit in April, right? So we need the 80%. But then remember, they need to, if they pay 1 month after the month of sale, right, in the month after the month of purchase, sorry, they qualify for 2% discount. So this is what we're going to do, right? So that will be 6 million times 80%. All this multiplied by what? 98%. Because we want to subtract the what? The 2%. You can go the longer way, calculate the 2% of the value of 6 million times 80%, then subtract it from that value. That would be too long. So the easiest way is 80% of 6 million. Whatever you get from that times 98%, it gets you straight to the answer. Right, I'll write the other one somewhere. Right, so that will be times 80%. That will give you 4,800,000 times 98%. That will give you 4,704,000. That will be the answer. If you want to go the long way, it just, waste your time. So what you're looking here, this 98%. This 90% comes from this particular value here. It comes from this 2% discount. So because they're saying if they pay, right, in the month after purchases are made, they qualify for 2% discount. So we're calculating the April credit purchase that are paid in May. That means they qualify for the 2%. Hence we're using what? 100 minus 2, right, which is equal to what? 98%. This is why we get the 80%, right, of the total purchases, right? So out of the total purchases, we calculate the 80%. Then from that 80%, we deduct what? The 2% for the discount. Right, then the next one, it says, let me see, the next one, right, 5, deposit for delivery vehicle. Deposit for delivery vehicle. Right, deposit on delivery vehicle, right? Because you are told that the delivery vehicle, right, a 20% deposit is going to be made on 1 May 2023. Then the balance will be paid in equal monthly installments of 4,500 over 4 years from June 2023. Right, so to calculate that, right, what you're going to do is it's 4,500. Right, how many months is 4 months? Is 4 years, right? So that will be 4 times 12. That will give you a total of 48. 4 times 12, it's 48. Right, that's 48 months. Then multiplied by monthly installment 4,500, because that's the balance. This will give you 216,000. At 216,000. So now you want to calculate how much was the deposit, because the 216,000 is the balance after a deposit was paid, because they said 4,500 will be paying the remaining, right? A deposit will be paid, but the remaining balance will be paid 4,500 in installments for every month for 4 years, right? So this is the total amount that is going to be paid in 4 years. They said equal installments, right? Then the deposit, then for us to calculate deposit, because this is the 80%, so you need to calculate the 20%. So basically say 20 over 80, because the 216 is the 80% after paying the deposit, times 216,000. Right, this will give you 20 divided by 80 times 216. This will give you a deposit of 54,000. Right, this will give you a deposit of 54,000. Then the next question, 5. Question 5, interest on loan. Right, interest on loan we given here. Osborne Industry will take an additional loan at 15% per annum. That will be, they didn't tell us when they will take it, but if you look at our budget, right, the extract from the cash budget, you can see we have loan. Is it loan here? Right, they're planning to take an additional loan of 20,000, right? So 20,000. So what you need to do, whatever interest that you are given here, right, was interest from the previous month. So what you now need to do is you need to calculate interest on the new loan, because the previous will remain the same. They will not told that they're going to repay the other loan, so we assume the interest for the previous loan doesn't change, right? It still remains the same. So that's the 2,250 that we are given here, right, from the previous month. So we need to calculate the new interest on loan, which is 20%, right? And they say this loan, right, additional loan at 15% per annum. And how much did they take for the loan? They took the loan of 20,000. So for our interest on loan, right, you calculate it this way, right? That's 2,250 plus 20,000 times 15% times 1/12, or divided by 12. Right, the reason why divided by 12, remember it's a monthly interest payment. 15%, right, it's per annum. You just need to be careful, right? 15%, Right, so it's per annum. You just need to be a little bit careful. If 50% is per annum, if you're calculating monthly, you need to divide by 12. So if we come to our answer here, right, 20,000 times 15%, you get 3,000 divided by 12, you get 250. So your final answer will be 250 plus 2,250. That will be 2,500. That's how you calculate your interest. Right, that's your interest, because the 2,250 were given, right, but we need to increase by the interest of the 20% loan, right, that was taken in June. And if you pencil on loan, okay. All right, then what is the next question? I says Mary is convinced Donny to buy a delivery vehicle on 1 May 2023. Donny agreed, but he prefers to use the service of Mangre, right, couriers, since they offer unlimited kilometers. On have state 2 points in favor of Mangre couriers, right. Number one, right, if you look at the expenses, right, the delivery expenses for the vehicles, they were 28,500, right. But then when you look at their new budget, which is down here, right, they buy the vehicle, they need to pay for the vehicle. Then at the same time, they will need to employ people for the vehicle. So now they need to pay 28,800, and provided they were being offered in terms of the vehicle, they were being offered where is it? Not bid committee. Right, Mary is convinced Donny to buy a delivery vehicle on May 2023. Donny agreed, but he prefers to use the service of Mangre couriers, since they offer unlimited kilometers on a fixed term contract. Right, so unlimited kilometers, there are no repairs, there is nothing. So in terms of expenses, right, in terms of expenses, so there will be vehicle expense, then delivery expensive Mangre couriers 28,500, right. But now, since they are buying a vehicle, they will need to have a driver and a driver assistance, right. So what you're going to need to do is basically you're saying state 2 points in favor of using Mangre, right. So the point number one, they've limited kilometers. I think they've unlimited kilometers on a fixed term contract. They have unlimited kilometers, right. That's number one. Number two, right, they don't have vehicle expenses, right, such as repairs, insurance, and other stuff, right, like fuel and everything. They don't incur all those, right. Then the cost of a driver and assistant is more than the cost of Mangre courier's monthly charge. So the cost of Mangre was 28,500. And let me just double check. It was 28,500. Yeah, 28,500. But now the driving assistant, right, is 29,800. Then driver plus assistant 29,800. Right, so it becomes more costly to have the two. Right, then it says the two sales assistant clause relatives of Donny and Mary. Two of the sales assistant are close relative of Donny and Mary. The sales manager is concerned that they are always absent from work, and the other assistant are complaining. Provide calculation to justify his concern. Right, so two of the sales assistants are close relatives of Donny and Mary. The sales manager is concerned that they are always absent from work, and the other assistants are complaining. Provide calculation to justify his concern. Right, if you look at this question here, right, because the question right at the top, it says here, right, the business employs 5 sales assistants who all earn the same basic salary. In addition, the earnings to earning a basic salary, the sales assistants also earn a commission of 1% each for all sales above. Because the key term is for all sales above budgeted sales for that month. The commission is paid in the same month. Right. So it didn't specify that whoever, that they've got individual targets. So the should say sales above budgeted sales, right? So that means they share it equally. Then if you look at the question here at the bottom, right, the budgeted sales for the month of June was 8 million, and the sales that they managed was 9,700,000. So coming here, right, so the working that you give it's 9,700,000 minus 8 million minus 8 million, that this will give you 1,700,000. Right, that 1,700,000 times 1%, this will give you 1,700,000. That's 17,000 actually. This will give you 17,000. Right, so that will be 7,000 for each one of them, and there are 5 of them. So at the end of the day, the reason why others are complaining, because the question is, 2 of the sales assistants are close relatives of Donny and Mary. The sales manager is concerned that they are always, the question didn't say prove that they are always absent. The manager is concerned that they are always absent, because its concern is that they are always absent. So they are not making enough sales, but at the end of the day, they will get a share of the commission of sales above budget that are made by others. So in total, each will receive 17,000. right? But these two are always absent. They just receive 70,000, which is the hard work of the other. So providing 1 point is basically the other two will receive commission of 17,000 each, even if their work was not equal to the work of others. They won't have worked as much as others, so others would do the work and they just get the commission, right? Then the sales assistant that's dissatisfied in their increase in June provide one reason for their dissatisfied quote figures to justify, right? If you look the increase in June, we come here, right? Sales assistants, right? That's sales assistant salary is 22,500, right? So salaries for sales assistants 22,500. Then for sales manager is the same. But if you come to the actuals, right? Sales assistants was 23,400 and the manager was 10,800, right? Compared to the budget, right? So when you come to your answer, right, the manager increase in terms of, it's always based in terms of percentage, that is 800 over 10,000 times 100 over 1. 800 divided by 10,000. That's 8% increase. Then the sales assistants, right? It's 23,400. That's a 900 increase, I think. It's 900. So that is 900 divided by 22,500 times 100 over 1. That's 900 divided by 22,500 times 100. This will give you 4%. So the question says, sales assistant when to decide the increase in June, provide one reason, right? Because the manager received an increase of 8%, while they received 4%. Right, then says a bid committee member from the social local public hospital is offered to recommend Osborne Industry to supply detergents and cleaning material to the value of 1,250 during the tender process. However, you only do this by if Donny pays him 35,000 to convince the other committee members. I'd give Donny and Mary advice, right? There's 2 points, right? This it's a bribe, number one. It is a bribe and unethical right? The bribe and unethical. Then the other thing, right? If this comes to public knowledge, if they pay the 35,000, it may damage the company's reputation, its image, right? What other thing that you can put there, right? And company reputation or image, right? This may cause problems with regulators, as Osborne may be fined or have their license withdrawn. Right, so those are the some of things. There are many things that we can put there. Anything that may lead to a company image being destroyed, right? And again, it's the major thing is unethical, right? And that's not encouraged at all, right? There is one thing that I need to correct right at the top here. The 6,000. 6 million, sorry, right? And on this one here, I missed one thing, right? I'll correct it, right? If you look at the question, it says, sorry, I just noticed later on, it says 60% demand of sale and less 4% discount. So on this, we're supposed to say 58,000, 5,887,500 times 60%, then times again 96%, just to cater for the 4% discount that is given here, right? I didn't highlight, that's why I didn't see it. You know, the importance of highlighting, so whatever you highlight, you are quite aware of what is happening, right? So minus 4% discount, so we need to recalculate that, right? So that will give you 5,887,500 times 60% times 96%. That will give you 3,391,200. So that will be the answer, right? For that one, I just forgot the 4% here, the 4% discount, right? That's what I'd forgotten, right? It happens, right? I didn't highlight it, so it's always good to highlight all the figures that you need to use. Thank you so much if you watched to the end. And right now, before I forget, sorry, this total changes, and the total changes to plus 414 plus 1,687,500 to 5,492,700. Right. Thank you so much for watching this video. I hope it's beneficial to you and others. Please share with others and subscribe if you haven't. Thank you.